All right, good morning. Welcome to the Thursday edition of Advisory Live. We're powered by Nasdaq IR Insight, and I'm your host, Will Briganti, and joining me is Masood Ghazi. Masood, great to have you back.
How's it going, Will?
I'm good. All right, so let's talk about macroeconomic and equities. Obviously, it's a big day for macroeconomic data. What's going on globally?
Yeah, so overnight we saw a lot of data come out. China manufacturing data, PMI came out very strong. Canada GDP up 4.5%, very strong. Eurozone inflation data picked up, which will trigger the ECB to reconsider their massive stimulus program. On top of that, jobless rate in the Eurozone is at 8-year lows. In the U.S., we saw personal income and consumer spending go up in July, so that's a positive news. However, inflation remained rather weak. Remember that the Fed looks both at the job market and also inflation data when they formulate their monetary policy. So overall, we're seeing growth globally. Markets are up today. Treasury yields are lower. Gold has been rallying recently, and the dollar has been losing steam.
All right, so thank you for that top line overview. Obviously, we had some central bankers meet last week over in Jackson Hole. The Fed met as well. What are some of your thoughts?
Yeah, so rather stale information here. It was last Thursday and Friday. Both Yellen and Draghi gave a speech. Interestingly enough, they focused more on the regulatory landscape, which is not the Fed's mandate. So slightly concerning for some people as they're overstepping their boundaries. They basically, the gist of the meeting was that they're slightly concerned that deregulation in the financial sector is taking place. In terms of how it played out in the markets, we saw Treasury yields drop massively. We also saw the Fed fund futures rate, so essentially the rate hike odds for December come down to, it's now at 33%. Remember, we're expecting one more by the end of December.
Okay.
So the expectations in the market is roughly 33%, excuse me.
Sure.
In terms of sort of how it's played out in the utility space, which is kind of the best gauge for in the equity markets, how interest rates are playing out. Utilities has been rallying. We saw a very good August for utilities on a year-to-date basis from a price performance perspective. They're up around 3.6% over and above the S&P 500.
All right, great. Let's switch gears for a second.
Sure.
Let's dig into the U.S. equity markets. We've been hearing about a paradox there. What's this in reference to?
Yeah, so there's an interesting phenomenon, as you mentioned. The investors call it a paradox. We're seeing U.S. equity markets at multi-year highs, but at the same time, we're seeing massive outflows from U.S. equity funds. The biggest outflows we've seen in about 13 years. So essentially, U.S. equity funds are taking cash out of the U.S. and parking it into China, Japan, and other emerging markets. And who's filling in the vacuum? Passive index investors, retail investors, and international investors are moving into the U.S. markets.
All right, so equity markets and 13Fs. How are investors positioned right now?
Yeah, so hedge funds and mutual funds are overweight the technology sector and also consumer discretionary. The interesting sort of disparity is that hedge funds are mutual funds are slightly overweight financials, and hedge funds are underweight.
Okay. Regarding global growth, what is the situation there at a high level?
So first time in a decade, actually, if we look at OECD data, and I think they look at over 12, 13 major economies, everybody's in sync with global growth. All countries are growing. So from a high macroeconomic level, we're in good times, and growth is kicking back in. Couple reasons. One, we have the Federal Reserve, ECB, the Bank of Japan. 8-9 years of massive stimulus program that's probably paying off. And finally, with respect to the U.S., talks about tax cuts and deregulation is fueling the economy. And obviously, U.S. being one of the biggest economies, usually when the expectations for the U.S. economy picks up, globally everything grows also.
So how is the U.S. performing?
GDP for Q2 was revised up to 3%, which is obviously good news. And remember that the historical GDP growth rate for the U.S. Since World War II, 1947 to be exact, is in and around 3.3%. So we're approaching closer to historical averages.
Okay. You just mentioned growth. in terms of drivers of growth. What's the legislation looking like?
Yeah, so yesterday, Trump, after he went to Texas to monitor the storm, the aftermath of the storm, he went to Missouri and he gave a speech essentially rallying for tax cuts.
Right.
Unlike, I guess, a healthcare bill in which publicly Trump did not make an appeal, this time with respect to tax cuts, he's front, left, and center. So I guess from a policy execution perspective,
Yep.
the White House and Senate and the House are kind of in sync, which is good news if they're looking to pass this.
Yep.
As always, making a public appeal kind of helps
Yep.
both the Congress to pass legislation.
Sure. So my final question for you is, obviously we're heading into a holiday weekend with the U.S. bank holiday Labor Day coming up on Monday. What should we be looking for in the next couple days?
Well, things have been quiet. There's been geopolitical tension with North Korea, so the
Right.
question is how that plays out. A lot of macroeconomic data came out today, so we'll see how the markets digest that. We won't have another central bank meeting in a while, so from central banks we won't be hearing from them. Also, unfortunately, with the Harvey disaster, it's considered to be the America's worst natural disaster.
That's right.
The economic bill is estimated to be in around $200 billion. Obviously has affected the energy sector.
Right.
Oil prices are lower, refineries are shut. So we'll see how America recovers from the Harvey aftermath.
All right, well, Masood, we'll leave it there. Thank you so much for that terrific insight. All right, thanks so much. Okay, and for all of our viewers, thank you so much for tuning in. This was the Thursday edition of Nasdaq Advisory Live. We're powered by Nasdaq IR Insight. You can always follow us right here on Twitter at Nasdaq, and be sure to visit our other Twitter page, which is at MyCorpSolutions. We hope to see you following us there for further intelligence from the advisory services team at Nasdaq Corporate Solutions. For all of those watching, we'll be back to you right after the Labor Day weekend on Tuesday, September 5th. Have a safe holiday weekend, and we'll see you back on Tuesday. Thanks.